certain doctors have been sort of onboarded, and that cost may also be sitting in this quarter.
Okay. So as we commission this and phase it up, you should start seeing that contribute to EBITDA pretty quickly.
That's right. Because the cost is already incurred. I mean, it's not a significant. I mean, the biggest cost is always the non-medical personnel, right? I mean, it's and I always mention that 23% or 24% of your overall revenue. In fact, for a new hospital, it's higher because the revenues are lower, and that is typically brought in large. I mean, that's really the significant amount of heads that you have is under that cost, and that comes in closer to the hospital commissioning, which is now. I think, very shortly you should have that hospital up and running.
And for, break-even in Dwarka, is, 12 months, 18 months a good time frame to assume?
Well, that's the textbook.
Okay.
We're hoping to do it faster, but that's textbook.
All right. Thank you so much.
Thank you. A reminder to all the participants that you may please press star and 1 to ask questions. The next question is from the line of Kunal Dhamesha from Macquarie. Please go ahead.
Hi, thank you for the opportunity. So first one on the institutional rates, I think there has been some revision upward, some revision downward. But when we sum it up, let's say for the first 9 months, what could have been the ARPOB impact in that channel? I think for the first half, we had suggested the institutional ARPOB has grown at 28% year-on-year. If you could provide that number for first 9 months.
I think it's, if my knowledge, if you go by, then it's been up on everything except for one item which went down, which I believe is a mistake, so we made a representation. But what is the impact?
Yes, Kunal, you have the number with you. I think if the price increase is 14 crores per quarter and there's a 6 crore annualized impact of this, so that means the net impact is 50 crore rupees on the institutional business in terms of price. So if you can divide it with the numbers, you will get the increase in the ARPOB, right?
Which will be what, percentage-wise?
Which will be 3-4%.
3-4%?
Yeah. Probably more than that.
So overall ARPOB will be less than
overall ARPOB will be less than 1%.
Less than 1%?
In the overall ARPOB.
No, but last quarter we had said that institutional ARPOB increased by 28%.
The institutional ARPOB, not the... We're talking about
overall ARPOB impact is less than 1%.
No, but if our institutional revenue is around 18% and that revenue is growing at 30%, then the weighted average impact should be around 5%, right?
No, so I think let's not confuse ourselves. First of all, the total impact is 50 crore rupees, right? As things stand today, on the overall top line, which is less than 1%, right? Our top line last year was around 6,600. So if we take 50 crores, that would be less than 1%. So that's one on the overall ARPOB.
This is now last year's revenue. This year's revenue was 17%.
Yeah. So let's say now if you talk about the ARPOB of the institution itself, then we do around 1,200 crores of business in a year from institutional, and this is a 50 crore impact on that, right? So it will be 4%, around 3.5-4% type. Yeah? Is that clear, Kunal?
Yeah, this is clear, but last quarter then, I don't know.
No, the last quarter growth in ARPOB is not only price, right? We never said that it's all because of price.
There's been a growth in institutional ARPOB, but we haven't said it's by price.
It's still the growth, right? Even in this year, this quarter, if you see, compare, the price impact is only 4% that. The rest is the business mix. Also, you should understand that when the onco goes up, the chemotherapy goes up. When the chemo goes up, the ARPOB improves, right? And a large part...
We've been focusing even with institutional on the higher end specialty. That's the outcome.
Sure. And the 15% ARPOB growth that we have seen, I think first half was also 13-14%. Going into next year, what is is that you kind of would be thinking about in terms of ARPOB growth? Because clearly these numbers are, in my view at least, is about the historical trend line. And we have been doing high-end surgeries, robotic surgeries. Do you think that this can sustain this run rate of ARPOB growth for the next 2 to 3 years?
Well, you're the analyst. You have to tell me. I mean, I keep asking the same question. Is there any one-time price change which has led to this? I mean, in my mind, there are a few factors which have led to higher ARPOBs. One is more higher-end surgeries. Second is international patients. Third is proliferation of insurance, and so on. These are things which are leading to higher ARPOBs, and if any of these is non-secular, then your guess is as good as mine. My belief has been that they seem pretty secular, and that should lead into next year as well. None of this is based on one time.
Yeah, and now it's not only we, right? So you see the competition, I think the ARPOB has been improving in all other hospital chains also. Yeah.
Right. Unless there is a non-secular trend which has been propelling it. But, I'm at a loss of what it could be.
And sir, one logistic question on the international patient bed share this quarter, if you can share that.
So it will be around 5.8%.
5.8%. Okay. Yeah. I have more questions. I'll join back.
Thank you.
Thank you. The next question is from the line of Ankit Shah from Canara Robeco AMC. Please go ahead.
Yeah, hi. Thanks for the opportunity. So my question again pertains to the Dwarka additions. So you mentioned that some of the costs have started coming, but major portion of non-medical costs will come going forward. So can you give some sense of like how much of that non-medical cost would be of the total cost? So, and also you had mentioned earlier that total losses initially in this should not exceed 30 to 40 crore. So can you give some sense on how this, I mean, would this be completely front-ended or, costs come in a stepwise fashion, so it will be more divided across quarters? So some granularity on that front would help.
No, I think it'll grade down, so it will be in a decreasing fashion. Of course, the first month is more, the second month should be similar, and then it sort of starts petering down till you hit break even. So the textbook, this size of hospital should have, a similar sort of 40-50 crore kind of loss, but we hope to perform better and maybe break even hopefully sooner.
Okay. So most of this.
I mean, it's a little hard to project because as and when the doctors come in, those particular programs kick in, right? I mean, certain doctors will be brought in with certain minimum guarantees, certain others with certain other minimum guarantees, etc. Because to give you that loss figure and actually what the trajectory of that loss is, I need to figure out what the exact revenue figures are going to be on that particular month.
Right. But so on the hiring front, I mean, does the hiring happen in one shot for the entire capacity, or does it happen in stepwise fashion? So?
No. So we are going to be coming up with 160 beds first, and of which also let's say we want to operate 100 odd beds. Then we in the first go we will be hiring at least 400 odd beds.
Okay. Got it.
Unless, we get enough of those kind of clinical programs to kick in where we start off with 116 entirely. So right now we know we're doing this much, but then always, let's say if there are 20 LOIs, which we have issued to 20 various doctors, etc. If 12 or 15 of them have joined, another 5 are in the process, it's in the works, right? So as and when I have it in hand, I know this guy's coming, I need to sort of get enough nurses and resident doctors for him to support him.
Got it. Yeah, that was my question. Thank you so much.
Thank you. The next question is from the line of Tushar Manudhane from Motilal Oswal Financial Services. Please go ahead.
So just on the international patient, would like to understand the growth maybe for the quarter and as well as for the 9 months, how if you could break down into volume and maybe the realization growth.
The growth has been 25%, I think both on 9 months as well as quarter. What's been the breakup?
Yeah, so the ARPOB now has grown by 9% in the quarter, but the bed share is 5.8%, and overall it's flat, right? So it's a 158 crores last quarter and 157 crores revenue this quarter.
Sure.
Volume.
Right. So this 9% increase in realization is to do with case mix or it's like the similar treatment?
So there's no price element in this. It's basically the case mix. Right? We haven't increased the prices. Typically, the prices of international patients are linked to the self-pay patients, and these get revised only in the month of April. Right?
Sorry, sir.
I said the price increase for international patient is tagged with the price increase in self-pay patients. The self-pay price increase happens in the month of April. So to that extent, there is no price element in this. It is only the mix which is increasing the ARPOB by 9%.
Understood. Yeah. And secondly, just on the overall operational cost, in terms of, let's say, employee cost and other expenses for FY25 in particular, where considering the different new hospitals coming up, so what kind of cost increase one should, think about?
No, so we can tell you about the cost increase on the existing hospitals, which is typically an increment of around 7%, and then if there are any additional beds getting, created, there will be many required. So typical many would be 6 people to 1 bed, right? So let's say if we add in 100 beds to the operational capacity, you should assume that there will be 600 more people, and to that extent, you can really value that, right? So I can't give you an exact number of the growth, etc., but I'm just giving you mathematics to really get to that number.
Got it. So effectively trying to understand, considering the scope of ARPOB growth as well, but at the same time addition of cost on account of at the existing sites as well as new hospital getting added. So is there a scope for further margin improvement in FY25, or we would be, let's say, having bed-related revenue growth, but margin would be pretty stable? Is that the way to understand, or there is a scope for margin improvement even in FY25?
No, you're mixing two things. One is your current beds, right? Your current capacity, which is about 3,500 odd beds that we have, right? So you have cost growth and you have a revenue growth. Okay. Assuming your revenue growth continues on the same trajectory, then you have that cost growth which would be similar to what happened last year, right? So EBITDA growth in that fashion currently what is there is, it should be that plus, because you get some operating leverage as well. So whatever EBITDA growth that you have over here, you're going to continue having that, right? Then comes the new hospital. The new hospital will be, let's say, for 300 beds. That's about 7 to 8% further capacity. That 300 new beds, day one will obviously start with lower ARPOB and negative EBITDA to start with. Then the question is, when do you break even? Do you break even in 6 months? Do you break even in 8 months? Do you break even in 12 months? If you break even in 12 months, then it will have a negative listing on the EBITDA. And if you break even in 6 months, then 1 year later, it may be a neutral impact to your EBITDA. So but a neutral means it still will pull it down, because if it's zero, you're taking a positive EBITDA and you're taking a negligible EBITDA and kind of this thing. So you've got two conflating kind of winds happening over here. But my belief is, because it's only 8% on the overall this thing, it doesn't move the needle too much.
Understood. Thanks a lot for this.
Sorry.
Thank you. The next question is from the line of Karan Gupta from Varanium Capital. Please go ahead.
Yeah. So basically my question is related to the international business. So what kind of traction we are seeing in the television for the medical tourism, and what's the steps we are taking to increase that traction, or maybe increase or improve the quality of our treatments? Because asking this question because in India the treatment cost is, I think, 1/5 of what the US and Europe is. So what's the traction coming from US and Europe? Because basically you said in your early Concall that the major traction is coming from the Bangladesh. So what's the position of this two big regions, US and Europe?
We don't get many patients from US and UK, because US and UK India is much cheaper, but it's sponsored, right? It's sponsored. NHS pays for it. And in the US also, the government, it doesn't matter if it's expensive, somebody else is paying for it. So it's never been my case people from developed countries will come to India. It'll only be people from countries where it's self-pay which will come to India.
Okay. So when you talk about medical tourism, so what's the, the patients? Where are the patients coming from?
We're getting patients from 145 countries.
Okay. And yeah, that's it. That's the question. No.
Thank you.
Thank you. The next question is from the line of Amit Kadam from Canara Robeco Mutual Fund. Please go ahead.
Hi, Amit.
Yeah, hi, sir. Good morning.
Good morning.
Just a couple of things on the swing what we saw in the inpatient volumes this quarter. Largely you attributed to the vector-borne disease. Just wanted to know, because we have a very limited understanding, like in last 3 years or so, we haven't seen such kind of large swing, because the bed days for this quarter is -1%. So can you just throw back from your past experience that have we had seen such kind of large swing which could have a material impact on the inpatient volumes and which could result in the bed days?
No, so what we are saying is last year, same quarter, okay, we had a big influx of dengue patients.
Okay.
We haven't had the same influx this year. So therefore, what you have is the reduction of 1% on this thing. But Yogesh, maybe.
So Amit, I think if you see the historical trends, you'll find that quarter 2 to quarter 3 there is always a decline. You pick up any competitor, any previous reports of quarter 2 to quarter 3 comparison previous year, you'll find quarter 3 is always softer, right? Now, and so -1% OBDs is very normal. If you compare Apollo, Fortis, Narayana, you pick up their last year results. Obviously, this quarter is not out, but you'll find that there's a decline in quarter 3 over quarter 2. So there's no exception here, right? So I'm saying this is the secular trend. You'll always find quarter 3 is down compared to quarter 2 because of the festivities, etc.
Diwali, Dussehra,
yeah.
Christmas.
Now, in our case, one peculiar feature is that in last year, since especially in Delhi, we had influx of patients in October, right? Typically, dengue finishes by September. But last year, we had, even in October, which was the Diwali month, we had dengue patients, and the Diwali month occupancy was 76%, right? Which is generally unheard of, right? In a Diwali month, you will have occupancy of less than 70%. So last year, October was very high occupancy because of dengue, and that's the reason why you see a drop a bit more sharper. Right? Otherwise, it would have been probably flat. If I really take out the drop in the internal medicine and pediatrics, where we get this patient admitted, that drop is 12%, right? While you see, Y and Y, the drop in OBD is only by 1%, but that particular specialty, which is 22% of the overall, bed share, dropped by 12%, right? Which is because of the fact that in last year, October, we had dengue patients. So I think what we're trying to say is that there's nothing operationally wrong in this quarter. It's only when you compare YOY, because of this October influx of patients, there is a bit sharper drop rather than what it should actually look at. So if I really adjust it, then you'll find that the OBDs actually went up Y and Y.
Historically, see, it's a seasonal business, right? Second quarter and fourth quarter are the strongest quarters in the hospital business. The first quarter and the third quarter are weak quarters. First quarter because your cost structure sort of moved up, but your third quarter because your revenues come down.
So is that clear, Amit? Is there any?
Yeah, I was just not contesting that particular point. I just wanted to know, because we have a very limited history, because we got from the data point, we did not have. I did not have the insight that whether such kind of some seasonalities. When I'm talking seasonality, I'm trying to compare YOY, because of some like vector-borne disease can have a material impact on the volume growth YOY. I can understand how quarter 2 to quarter 3 seasonality works, but I was just saying in the past history whether such kind of events like vector-borne not there could have a material impact on the volume growth. Just wanted to.
100% it does.
Okay.
I mean, it did in this year, right? Because last year, quarter 3, as I said.
And it's not an anomaly.
Yeah, it can. I mean, because it depends on when rain happen, when this epidemic type stuff happen for.
But why? But you're not comparing 9 months to 9 months. You're only comparing this quarter to last quarter. On an overall annual listing, etc., it'll be not a significant impact, right, on your occupancy.
Right, that I get it, but first
On a
time.
whole. But yes, I mean, you can, if you don't have a dengue season, you can, I mean, in fact, a drop can be much sharper than this, much sharper than the 1%.
Okay. And
Okay.
just on
You
the
can have between 1 to 3% fluctuation on both sides, positive as well as negative.
okay, got it, sir. And just on the outpatient thing, is it just an outcome of the similar effect that because there were lesser patients visiting because of there was no disease?
That's right.
Okay. So nothing much to read in this particular thing based on this particular like why it was this, like because I've earlier seen this outpatient at least growing at mid-teens or kind of thing, but now which showed 3% in this particular quarter is nothing much to read.
So I think one thing you're rightly doing is you're looking at it year on year rather than quarter on quarter, because, like I said, you have seasonality in this. So your third quarter in any case is weaker than your second quarter. But if you look at it on a Y-to-Y basis, you can attribute it to the number of dengue patients in Delhi.
Okay. And just one more final point is on the Lucknow thing. So, as per the current timelines, we should able to integrate that particular business financials to ours by quarter one next year, FY25.
Yes. Yeah. I mean, depends on when does the closing happen. If the closing happens in this month, then we'll have to consolidate from the date of closing, right?
Yeah.
So we don't have choice.
Fair enough, sir. Thank you, sir. That's it.
Thank you.
Thank you. Ladies and gentlemen, this will be the last question for today, which is from the line of Alankar Garude from Kotak Institutional Equities. Please go ahead.
Hi, good morning. Good morning, everyone. So, on that question on ARPOB, we have reported a 15% ARPOB CAGR over the last 3 years, and you alluded various factors, case mix, international, institutional, insurance, etc. Now, would it be fair to say that a larger chunk of this improvement can be attributed to an improved case mix?
So, Alankar, if you see the elements of ARPOB increase. One is the increase in the prices, right? Which I think we've been saying that it can be up to 3%. Then there's an increase in OPDs. You know that OPD revenue increase will improve the ARPOB because you don't consume any beds for those OP revenues. So that typically contributes around 2%. So this makes 3 plus 2, 5, right? Then you have, oncology growing. In our case, you've seen the oncology growth is, outpacing the overall growth. So that oncology happens to be a high-end specialty. So that typically adds 2-3% to the ARPOB. And then comes this whole, channel mix and the case mix. I'm saying if you take out the oncology out of the case mix, then there is balanced specialties and the channel mix. I think that typically has been contributing around 6-7% increase. And I don't see any reason why it should not going forward. So from my perspective, I think if there's a 9 to 10% growth in ARPOB, that should be reasonable.
But, having said that, you have to keep in mind one thing. We are talking about a healthcare system where there is capacity constraint in some manner, right? I mean, you've got occupancy levels which are pretty much at the threshold. When you have that situation, then typically you'll see a higher uptake on ARPOB compared to vis-a-vis occupancy, because you can't move up on occupancy. There isn't so many beds. So more and more patients get sort of pushed to daycare, which lead on, smaller surgeries compared to larger surgeries. So you kind of schedule the larger surgeries first. The smaller surgeries are scheduled or the appointments are given at later dates, etc. And some of that later dates kind of evaporates. So what you see is the quality of work starts moving up. But at the same time, if I had a magic wand and I could put up beds adjacent to each one of the hospitals, then what you would see is a higher uptake on occupancy and lower this thing on ARPOB. There's always an interplay between the two.
That's helpful. Maybe a question linked to that is, as we double our bed count over the next 4-5 years, would the case mix for the newer beds be as good as our flagship hospitals right from year one, or the ramp up in the case mix would be more?
No. So if you take Shalimar Bagh, right? And, Shalimar Bagh, we did a brownfield. So you can look at expansion akin to, and 85% of it or 90% of it is brownfield essentially, right? So if you look at Shalimar Bagh, where we added the 40% or more beds, and you see our experience over there. Now, the beds which got taken up, obviously get taken up more by the institutional business that we are kind of driving out. So therefore, if you see our institutional business, we say apple to apple, year on year, it is the same. But if we look at ex-Shalimar Bagh, then we are far better in the institutional, because institutional overall has come down there. But what it means is, even if your ARPOB, your operating leverage is so significant, okay, that your EBITDA per bed, which comes out of from the incremental beds, is significantly better.
Yeah, so similarly, the ARPOB growth in Shalimar will not be the overall growth. It will be less than that.
Fair enough. My
second bed, and in fact, the operating margin even from these beds, okay, is higher than the existing beds.
Yes.
Understood.
Yeah.
My second question is, you spoke about the potential of Lucknow and Uttar Pradesh for us in general earlier. Now, when it comes to expansion beyond our already announced plans, you had said earlier that we are looking at some 21 cities for potential expansion. Will we continue to aggressively look out for acquisition opportunities in these 20-odd cities now, or do our priorities get aligned more towards Uttar Pradesh now with the Lucknow entry?
No. So, priorities don't get aligned from that standpoint, because it's not as if I'm going to get 2 or 3 acquisitions in a place like Lucknow. Even if we have a strategy of looking at building it out, etc., it's going to still take some time, right? It takes years. We are looking at deploying our balance sheet today. So, and we have the wherewithal to do it. For us to add 1, 2, 3, 4 hospitals in a space of 1 to 2 years, etc., is not a big thing, because the rest of the things that we're doing is essentially brownfields in any case. It doesn't tax me more. It takes me as much effort to do expansion on Shalimar Bagh as operating Shalimar Bagh. And similarly, wherever we're doing brownfields. So both from a financial or a human resource standpoint, we are quite comfortable with what we are doing, and we are prepared to go to these cities as well. And we are actively looking at, I wouldn't say aggressively, we don't like to do things aggressively, but we are actively pursuing opportunities in other cities as well.
Understood. Thank you and all the best.
Thank you.
Thank you.
Thank you. As that was the last question for today, I would now like to hand the conference over to the management for closing comments. Over to you.
So thank you all for being on the call yet again for the third quarter, and we are looking forward to a robust and a strong Q4, as usually is the case because of seasonality. Thank you so much.
Thank you, members of the management. Ladies and gentlemen, on behalf of Max Healthcare Institute Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.